What's going on, everybody? This is Jordan with Conquer Trading and Investing, and this is a look at the S&P 500. We're going to go over our overview. We're going to go over our plan ahead. We're going to break it down on the charts. Before we get started, before we get into it, I want to bring your attention over here to this trend line that I have added since our last video. Now, those that were with us for this morning's live training session obviously did see that. If you're not yet following us, whether it's on the replay or for the live stream, there's a link below in the description that will give you information on how you could receive alerts for when we are starting our live session every Monday through Friday, 9 a.m. Eastern time. We go live, take a look at the markets. We start off with the S&P 500, giving our plan for the session ahead. You could see I added this line over here, and you could see why. Look at this. Look how it's come into play. And there's something else special I want to show right now about it with you. You could see that this is what we were looking at. I added this in this morning. This is now what we're focused in on. And then I want to show you one other thing. The trend line that we've been following, I still have that on my chart. You could see it right here. I've actually made it a little bit transparent so that it's not coming into play right now. And the reason why I did that, there's that line. The reason why I did that is I like a clean working space. I like a clean working space. It really does help the mind focus. So that's still on the chart and we could bring it back if it comes into play. But I think this line right here, this trend line right here is definitely what we need to focus in on. And I want you to see something that could possibly be developing. Do you see this possible left shoulder and then a possible head over here? And what could be possibly forming is a right shoulder. Now, does that mean as we're being rejected by this resistance here at 28.89 that we should go ahead and enter a short? Maybe. We're going to look at that in just a little bit. But really, what I want you to focus on and know that this pattern, a head and shoulders, does not trigger until the neckline breaks. This is the neckline. Now, I didn't set this in as the neckline. I set this in as a trend line. And then after the trend line was in place, the possible head and shoulders forming now really does come more into play for me. If we break below this neckline, that is the trigger for a possible breakdown of the head and shoulders pattern. If you want to see where possibly this pattern, if it does trigger, and do not get into it before it triggers, where the possible profit potential would be, it would be right around here, which you could see is this area of support as well. Right around 20, no, I'm sorry, I'm gonna bring that up a little bit. That should be around 25.47. 25.47. That's not something that we need to focus in on or think about, just giving you that little bit of perspective right now. Whether or not this is a head and shoulders, we don't know yet. You don't take this right now hoping this is a head and shoulders. The trigger's on the break of the neckline. Now, that doesn't mean that we shouldn't be looking to possibly, now that this resistance is being rejected over here. Do note, over the last week, we've seen a lot of selling going into the close. We're seeing that again today. We're going to look at some macro first, and then we're going to come back. And when we come back, we're going to look at what exactly our trading plan is going forward over the next 12 hours until we get to the morning session. Let's take a look together first at some interesting macro. In this episode, we get to take a look at the macro. You know how much I do enjoy keeping abreast of everything that's going on and how that fits into the puzzle. So we're going to take a look at that right now. You can see that hedge funds have recently boosted net short positions in the S&P 500 futures to the highest level since 2015. Look down here at the chart. You could see it was towards the middle of 2015 where hedge funds had their highest net short positions in the S&P. Let's look what that means. Now, if you look over here, right here, while the S&P was trading around 2140, this was about the middle of the year, right? And this is when hedge funds had their highest net short positions in the futures market. You could see that we went down about another 15% all the way to the lows by the end of the year, early next year. Well, actually, that's not even true. Over the summer is when we spiked down, came back up, and then early in 2016, right, that is when we were down another 15% or so. So you could say that they were positioned correctly Hedge funds are obviously very agile, able to get in and out, and there was the potential here for them to cover those shorts with some nice profit. You could see now on the bigger scale of things, that was also the low. As for the next few years, we went up to make new all-time highs. Now, when I talked about hedge funds, stock exposure is also the highest in the last 3 years. Managers are grappling with the opposing poles of deteriorating fundamentals, as we've all been looking at on this channel. We all understand, set against the Fed's inspired optimism, or to translate, the Fed's liquidity. And it's not such an easy thing to be navigating right now, which is why every day we are doing this, right? We're following what's in front of us. You could have your overall thesis of what you expect to happen, whether or not we're going to see some type of V-shaped recovery, go maybe test and break to new all-time highs, or whether or not, because of the situation in the economy, we actually should test and break the March lows. But nevertheless, you need to follow what is happening on a day-to-day basis and really set your mind frame for that swing trader's time frame of 1 to 5 days out. That's where you can make a really good living. This is an interview with Hedge Eyes, Liz Ann Saunders, who said at the March lows, stocks were discounting the kind of economic collapse we're currently in the midst of, but the subsequent rally is less about economic optimism and more about the Fed liquidity, affirming what we just shared and just showed. She went on to say that the stock market's V-shaped rebound is unlikely to be matched by a V-shaped economic rebound. And really, the importance that we have to really consider, is it possible that the markets do have a V-shaped recovery, full recovery, test and break to new all-time highs, while the economy itself lags and deteriorates further? Consider Venezuela. Look what happened to Venezuela as the economy and the currency basically went down to nothing. Their stock market traded at new all-time highs. Here is a picture of that deteriorating economy, and you see record drop in exports. Do you think that's going to recover anytime soon? Is global trade picking up, or is it continue to slow down? Be aware that companies right now have really high inventories ahead of this event. How long is it going to take to work through them? We have also one other thing that I want to share with you before we get back into the charts, and that is that currently the projections for the annual deficit are equal to 18% of the GDP. Now I ask you, what happens if the GDP shrinks? Think about that. The highest since the end of World War II and nearly 4 times what it was in 2019. That pushes the national debt to 101% of GDP. Again, if GDP falls, what happens to that national debt level? Also the highest since the end of World War II. The U.S. Treasury expects to borrow $3 trillion in the second quarter. Deficits. Let's check out the charts. All right, we're going to start this off with some multi-time frame analysis. First, I want you to see this is a daily time frame. You're looking at the full. This is 23 hours a day worth of data, and you could see that still we traded up on the day. I want you to pay attention to that as we start dropping down to different time frames, just to give you that perspective that overall in the day, we traded up about 1.5%. Now let's drop down to the 8-hour time frame. This gives us the New York session, right? This gives us a pretty good view of what happened during New York. We traded up all the way to the 28.89. Again, we had that between 28.89, 28.92, that area as resistance. We were rejected by it. If we look at what happened during the New York session, trading at the lows and trading down into what is an area of support. Let's change this over to support. Now, whoever's listening and watching, you mentioned yesterday that we could click this cloud and that it would be able to give me an opportunity to share this chart with you. Now, I don't see how that works. I would like to be able to share my chart with you so that you could see all of my support and resistance levels, right, in a read-only mode. I would absolutely love to do that. If I have the time, I will do the research. I've been pretty occupied lately, pretty busy, and I haven't had a moment to really figure out how to do that. I thought I could just click on the cloud and be able to show you. I can't. This is now a support level that we're closing in or around. Now I want to drop down further. I want to drop down and we'll look at the 30-minute time frame, and you can see that ugly close. Couple of things. The most important, everyone who was with us this morning knew that we were looking at a trend day, and as long as that trend day held and we didn't trade below this support at 28.58, we weren't looking to short the market, right? That plan is still in effect. Right now, you're coming into some support. Do you want to lean in against that support? Well, I would like to know more about what all this selling was about in the close first. I really would like to know that. I'm looking at this from a technical perspective. Here's a few things that I want you to keep your eye on, and then I want to get into something really important that happened over here. This is the most important thing that I'm going to share with you in this video, and I really want you to pay attention to what I have to say. Before we do that, we could go ahead and we could add a little bit of a trend line. You could see this, right? I could say, okay, looks like it's being, let me make that a little darker for y'all. You can see that it's being breached right now, right? This is caution, 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 right? You can see once that trend line is being breached, and it's being breached right now, that's an indication that the current trend is beginning to wane. And that's not to say it's not going to consolidate over here. That's not to say that it's not to consolidate over here. You have some options. First, before we look at what is happening next, so I'll make that really clear. My plan going in overnight and into tomorrow is keep an eye out on this. As long as this support holds, all right, let's see if we could consolidate over here in this area, right? Let's see if we make another attempt and look to take out this resistance and or hold it, right? That opens up the opportunity to the long side. What about this? I told you we're going to get into that in 1 second. And on the downside, if we do lose this support, that definitely opens up a trade that I'm really interested in, that I think there's some momentum building after the rejection today of this resistance. We looked at the possible head and shoulders forming. Let's get into this area of interest so I could talk to you about what happened over here. And I'm even going to pull it down to a 15-minute time frame right now. And again, so we were looking this morning. This is what was at the non-manufacturing data came out. We talked everyone through this area, and then guess what happened? We had the London close, and then we also had New York going to lunch. Now, the time to trade, the time not to trade, is as important as when to trade. You have to understand that the times that you trade the times that you should not trade are as important as the times you should not trade. Now, when New York goes to lunch, up until the earliest 2:30, those 2.5 hours, you never trade. You just don't even look at the charts. You don't need to. You're not looking for any type of trade during that time frame whatsoever at any time. So I was not even watching or interested in what happened over here. I do notice that this line at 2889, now you could see over here it did come in and act as support, right? But down over there, you could see if you're day trading this, if you were day trading this, intraday trading, and you saw that this was where the resistance came up into that line, but also over here. This is super healthy. At this point, this is super healthy. As you see this resuming off here, you want to go long if it's at the right time of day, right? Now, generally speaking, the morning up until lunchtime is a super good time to be trading. Pre-market New York, super good time to be trading. And as well as also after the bell, this next hour of trading is a really good time. And then as we get into Asia and London, it's also a really good time. You do not want to be trading at all during lunchtime in New York. You don't want to take any signals that happen during that time. You want to be looking at what happens, especially the last half hour, from 3:30 Eastern time to 4 p.m. Eastern time. You want to be really, really involved. And also, generally speaking, you could begin monitoring the market from 2:30 on. If you're in a trend day, that's a good time to be active. This was a trend day up until you could see the last 45 minutes of trading. Now, there was no trade on the breakdown of this, right? Or at least for me, those who are trading intraday, once that level broke, once this level of resistance turned support, right? That yellow line, once that broke, I'm sure that a lot of momentum traders took advantage of that. That's not my style of trading. I have no desire to trade outside of my style of trading because I'm able to constantly, mindfully make money. Now, what is next? That's a really important lesson. Focus in on that. If you were looking to trade during this time of day, in the future you won't do it ever again because you'll know time of day, right? Absolutely no trading between lunchtime and 2:30 p.m. Eastern time. However, that does not count on FOMC days, of course, right? Because FOMC rate decisions are at 12 p.m. Eastern time, 2 p.m. Eastern time. Press conferences at 2:30. You want to be trading. I want to be trading during those times. You could be active when the market's moving. I'm talking about normal trading days. Step aside, wait, see what's happening right now. Because of this large sell-off, and this could hold, you could see if we hold up here right now, okay, that's good. I'd still rather wait and get above this area of resistance, which we did not close above today on the daily. This resistance held. So until we turn it and flip it, no business at this point looking to trade on the upside. What about this support over here? Well, this gave me big cause for concern, right? It looks like we're breaching this trend line. Do you want to step in over here after seeing all the big boys sell going into the close? I don't. If we get below this area, absolutely, I will try and take a look at it. That looks good. Come back with me. Let's look at the 4-hour time frame. Let me clean up the charts first for you for just this quick second. Again, you need a clean working space. Let's look at the 4-hour. Probably then go down to the 2-hour. Look at that. Is that head and shoulders? Is that head and shoulders coming into play? I don't know. I have to be honest, although get below the support level at 28.58, I am happy looking for a momentum play here to the downside. Maybe I get lucky and maybe that leads into me being able to hold and push that trade up until the neckline. We can watch how price reacts. I don't know. I still have a bullish bias above this trend line, this neckline. Overall, I still have a very bullish bias in the market right now. I'm looking for the upside. But again, even though I have that bullish bias, doesn't mean I won't play a short trade right over here. When I say short, obviously that means selling the S&P 500. When I say long, obviously that means buying, right? So again, I maintain above this neckline over here. I'm calling it a neckline. It's a trend line. Maybe it's a neckline. Maybe that's a head and shoulders developing. Who knows? We don't need to really think about that right now because until the trade triggers, until the neckline, if it is a head and shoulder breaks, if we come down here, then I could say, okay, you have a head and shoulders right here. We broke down the neckline. Excellent. Gotta love it. All right, so there's plenty of opportunity. I hope that was a good video for you in the fact that you learned something. And if you did learn something, if you enjoyed that insight, if you took any nugget from this video, please go ahead and smash that like button. All right, everyone. See you tomorrow.